Well, hello everybody, Michael Silva here. Not a bad start to a Monday looking at the S&P 500. We got a lot to discuss because there's actually some bullish things taking place with some big names. So we're going to go into stocks like Meta, Microsoft, Nvidia, a couple others. We're going to go into various indices like the SPY Qs, and then we're also going to get into the 15-minute charts to get a little bit more intricate and talk about what's on the radar this week. In today's stock market brief, if you're new here, welcome to the show. We like to do these typically Monday through the Friday. Been a little sporadic as I've been a little busy leading up to having my first baby. Yoo-hoo! We're going to get right into it today. So looking at the S&P 500, the last trading day was Friday. Today was the first start of the week, Monday. And what you notice here is this candle, the Doom, is trading within this candle, that big bearish outside trading candle. Very similar to how we had this big bearish outside trading candle, and we had the day trade with inside of it. We had another and another, and then finally it broke to the downside. So to be more bearish, you'd say you'd want price to get back below the low of this, but to be more bullish, you'd want price to get back above it, the high of the prior trading candle. Now, I will say that we are trading back above the quarter-to-date anchored VWAP, and when we get back above it, it's typically, hey, it could be very well bullish, and as we're seeing price action kind of just consolidate here, potentially flagging is if we get back above this and start breaking out, it could try to go strike the prior swing high over into this area. That would be more of a bullish case. Let's take a look at the Qs. The Qs, though, they're actually not trading above the quarter-to-day anchored VWAP. And today's trading day, we actually had a lower low, very small lower low put in right there, and a lower high. So this is not an inside trading candle. However, the body itself is trading there, but we're still underneath that quarter-to-date anchored VWAP. If you take a look at the Qs, we almost connected. It's hard to see, but we almost connected. Sorry, not the Qs, the IWM. We almost connected with the quarter-to-date anchored VWAP, and we started finding support from that area. So this potentially could very well be wedging where we talked about, okay, it was a big, strong run-up. Maybe not the time to get it here. Look for consolidate, a pullback to the all-time high anchored VWAP, or we stated the quarter-to-date anchored VWAP. So if we start breaking the high of today's candle, maybe that swings us back up. We try to take out that 200 area, okay? So that would be more of a bullish sign. And if you take a look here at the DIA, the Dow Jones, this one performed the best today. And it could be because it looked like there was a little bit of a rotation into dividend-type names. That's what it looked like if you look at the overall S&P 100 and what was ranking the highest. Okay, so if you take a look here, this one did not pull back into the quarter to date. We never even got a back test of this breakout area. And you can see that it kind of flagged here. Now we saw some strength. So is this going to consolidate more? Perhaps. So we'll wait to see. As you can see, this trading candle was actually just trading with inside of the prior trading day candle too as well. So right now, it really is just a period of consolidation. If we take a look at the 15-minute time frame, the daily expected move was 450.13, and you can see we gapped up today in the SPY, and we reclaimed that quarter to date. You can see it acted as resistance, then we traded around it. We traded right around the upper daily expected move, and when we finally broke through it towards the end of the day, we came and tested the month-to-date anchored VWAP, so the anchored volume-weighted average price, and we closed right there. And as you can see, we're still below that declining 5-day moving average. So if I update you on this chart, what you'll see here is a couple of lines. We have 438.95 to the downside. That's the lower weekly expected move. The 450, 467 is the upper weekly expected move. And then the white lines are the upper and the lower daily expected move. That's at 448.25 and then 453.17 to the upside. So understand that if we get back above here or even here, the 5-day moving average at this particular time is declining. So you want to be, if we get above, be bullish, right? Bullish, but with some caution, okay? Because it's still declining. You'd want to be more bullish if it starts turning itself back up. Price comes up, it backtests it and shows strength, and you could follow through on some of that strength to potentially play it higher. Now, we do have some big things taking place this week, and it's expected that inflation might uptick from a year-over-year perspective. So this is going to be, or from a month-over-month perspective, which would be the first time that we've seen in a little while here. Those numbers come out, inflation, core inflation, come out August 10th, which is Thursday, and then we have PPI numbers on Friday. Tomorrow we have some Fed speak. We have a couple other things going on. Then also on Wednesday, not too much as well going on. Okay, so this is where it's going to get interesting, is seeing the Thursday and Friday and what price does leading up into that report. Now, I've been pointing out this hidden level now on Twitter, and then on my last video, I believe it was, on ES. Now, if you don't know what this chart is, this is Bookmap. It allows you to see behind the candlesticks where orders are actually hiding out. This is what the software that I use to trade intraday. It gives me just a better idea of where I can place better risk to reward trades. What I'm seeing is a pretty large order here now for over a week at 44.05, and the longer that these levels stay here, it doesn't mean that it has to stay here. Somebody can pull this order. We're talking 1,700 plus contracts, and it's been here for a while, and the longer these stay here, makes me think that, hey, somebody might know something. They believe that price will be coming down into this area, and the longer that they hold, these things can potentially act like magnets and eventually suck price in. So perhaps this is the bet leading into the CPI print. I do not know, but I want people to be aware of this level. Now, earlier in today's trading day, there was a big level over here, and this might come back on our radar too come tomorrow, but that was right at about 44.95. So if price tomorrow gets down into this area and then we have these orders back, perhaps that might act as a potential level of support if it can hold. If it breaks, we might be able to see a flush to a lower level of liquidity. Now, what does this look like on the ES chart if we actually came down to 4,400 or 4,405? That would take S&P 500 right down to this prior swing low where we could potentially act as a level of support. So, I mean, that would be a pretty big hit, as we've already, like a lot of people have been saying, oh, the market's turning around. That would be basically double the size of the current pullback that we're in. But overall, we'd still have a series of higher lows and higher highs. So even at that point, if it bounces from this area, then potentially creates a lower high, then it might be something worth considering where we have a potential topping pattern and then maybe potentially breaks down further. But if it just bounces from this area and we break this high, then we're just continuing on the current trend. We also have some decent size earnings this week. We have UPS tomorrow morning, Lilly, right? LLY, we have Datadog, we have Barrick Gold, which is one of the bigger miners, the biggest miner, I believe it is. And then we have Disney on Wednesday after the close. We got Baba. That's going to be another important one to watch. That's before the open on Thursday. And just a couple of other ones that have been decent. Like, for example, Celsius might be one that's closely watched. That's after the close tomorrow. That's been a pretty strong performing stock. So there's a lot of potential catalysts to bring the market down. However, the reason why I'm saying there's also some bullish things going on is because if we take a look at some of the big names that make up this market, the heavy mega cap names that can move the market, the NASDAQ 100 and the S&P 100, let's take a look at Meta. Meta's been in a very clear uptrend for a while this year, right? And it's been roughly just, you have an inclining 20-day moving average, inclining 50-day. All that's telling us is the trend, it's moving, they're inclining. And what you see here is a consolidation, right? So we have an inside trading day. And then you can see we've been really just trading pretty much within this candle here, which I believe was earnings, but don't quote me on that. Now, during this pullback, so we had this big volume day, which I believe was earnings. If not, it was still a big volume gap up day. And then we have volume kind of decelerating here during the pullback while it's in bullish context, and you have a tightening pattern. So remember, price action moves between expansion and contraction and back to expansion. Okay, now whether or not we know what it's going to do, we don't. However, you can look at a couple of things. You can say, okay, well, the trend is up, so that's one for the bulls, right? Two, you have a pretty strong risk versus reward. So if you buy the breakout, or if it breaks above the high of this trading candle, or if you want to be more, careful, this trading candle, you can potentially play it to the prior swing high, which is just over 325. So you're talking right at around 315 to potentially 325, which is a $10 per share move if it does break out, where you'd be risking, if you say potentially 310. So you'd say, okay, if I can get in at 315, I'd be risking $5 potentially to get 10. It's risking 1 to potentially get 2, or maybe so there's some profits, and then you could potentially play it out where it breaks out even further. Okay, so that'd be an option to watch. If it starts breaking below this, then I'd say let's pay attention to the gap fill down here, which is roughly around 300. So these areas, once they get filled, can become potential levels of interest of support. So we'll see if that is actually the case. But as it stands right now, just a bullish consolidation. Microsoft is obviously another big one. Now, This one's also wedging as it stands in a bullish context, but this one you got to be a little bit more careful on, because if you just look back to, early June, we really haven't gone anywhere, and it's starting, the 50-day moving average is starting to flatten out, the 20-day is starting to flatten out, so you'd really want to see this back above 340, but there's still the case where, hey, we had this inside trading day. If we start breaking above, getting back to the 50-day moving average, it could potentially create more excitement or a little bit of a pop to potentially go try to hit that prior swing high there. Okay, so that's another one to potentially pay attention to. Tesla's been pulling back, right, from the 300 marker, and we've been pulling back, but remember, it's in bullish context, so it could very well just be consolidating a big run. Now, today we had some news on Tesla, started out getting down to around that 240 on the low, just around there. But then we closed rather unchanged on the day. It was down 1%, but the candle itself is known as a doji candle, and that's basically where you have, you open and you close at the same area, even despite seeing a lot of price action in between. And these could be potential reversal candles as you see that long lower tail here. So if we do start reclaiming the 50-day, maybe we go back to 270 to get to that 20-day, which is starting to curl over, which could be bearish. However, I just wanted to call out that the price action itself, right? Expansion. Now it's tightening up again. If we start getting back below 240, perhaps that opens the door to go lower. But if we start reclaiming these levels, this could be a potential another one to watch from a more bullish perspective too. And then Nvidia has been in a nice uptrend ever since its earnings gap. And you can see it's kind of just been going, just kind of trotting up. It consolidates, it breaks out. It consolidates, it breaks out. And now we're consolidating again, and we're holding above this prior area, which could be support. So if we reclaim this 460 area, perhaps that we try to go swing again to that 480 and potentially even try to hit that big psychological level 500. Now, if we start breaking down from this low and getting under the 50-day, then it would present some more caution. And you can see that here in the semiconductor ETF, so SMH. The biggest holding, I believe, is NVIDIA. And what you'll see here is we've been in a bull channel and recently, and then the green lines are just highlighting little trends within it. And we've been basically skirting along this lower line here. You can see we opened beneath it, we closed on it, and then we opened and we kind of chopped around and we're holding it right now. So if this wants to bounce back up and try to get, a little bit stronger push or a blow off, I mean, it's always possible. But if we start cracking under the low, start looking at the middle of the range to potentially act as a level of interest of potential support, and even the lower channel there too as well. Another big one is Google. Google's been performing very well here too, as we've been seeing this throughout a lot of these tech names this year, communication names. So you can see it consolidated, we broke out, we consolidated, we broke out, we consolidated, we broke out. And now as it stands right now, we're above the 20, 50, 200 day. They're all starting to turn up again. We had a decent day today. It was up 2.67% with a higher high and a higher low. Hey, perhaps if this thing wants to consolidate a little bit more and then break out, we can go try to retest that swing high, potentially even push through that, which would be quite bullish for the overall market. Now, one that's holding us back was Apple, right? So Apple broke that trend. We've been talking about that kind of algo-driven type price action where they're very shallow pullbacks and then it runs, shallow pullback and then it runs, shallow pullback and it runs. We said be careful if it breaks. Well, on earnings, it broke, boom, and we had some follow-through today. So this is one obviously to be a little bit more cautious of because Apple's the largest mega cap name. But if this starts bouncing, perhaps other names will follow. Perhaps we get some sort of another back test of some sort, or potentially backfill or reclaim of the 50-day. Because remember, tops take time if it wants to head lower. Sometimes they can be quick flushes, but I still think that people would think that is an amazing opportunity. I mean, just take a look here how it was overextended, and then within like 3 trading days, it was already in oversold condition via the RSI. One thing that I want to also point out is the summation index on the NASDAQ. This clicked over for now 2 days now. So today and on Friday was the original day it clicked over, which is identifying a potential change in trend. It identified a potential change in trend here. We moved up, now ticked over. So now we're going through this consolidation. The last time that we had that bearish crossover, which was right here, all we did was consolidate before making a nice run up. So yeah, it's not the greatest sign as it stands now because it's telling us that, hey, we might be seeing a potential change in trend. So we need to be aware, okay? But like I said many times, it could just be a period of consolidation. So that would be the more bullish standpoint. And the last thing I want to close off with is the bullish percent index for technology. This one was that negative divergence that we've been tracking. Well, it's sold off, but look how fast the RSI moved into oversold condition, 27.29. So it was overbought. Now it's oversold. So what we do is potentially wait for a bullish divergence to form here. Remember, oversold can stay oversold for a while. Overbought can stay overbought for a while. So it doesn't mean that it can't go down further, but just be aware that, hey, it got overextended to the downside. We have big mega cap names starting to consolidate that look that they are in bullish context. All right, so they are in bullish context, being that they're above the 20-day, 50-day. They're all inclining there. So if we start getting a move up in these tech names, that could very well help the S&P 500, which means that we recapture that quarter to date, which says that, hey, if that's the case, we might go try to break this prior swing high over here and see some more upward momentum. But as always, like I said previously, we need to be careful, pay attention to the smaller term charts. It's still declining. You want to see a series of higher highs and higher lows and reclaim these levels and this to start turning back up. But that's all I got for on today's episode, everybody. Hope those charts helped out. See you later.